Hello, everyone, and welcome to this WTR Symposium series. Crypto's new chapter begins, the regulatory reset. I'm your host, Sean Severson, founding partner and CEO of Water Tower Research. I'd like to introduce my WTR Research colleague and analyst who will be the co-host for this first installment of the symposium, Dr. John Roy, Managing Director, Technology Research. John, welcome to the conference.
Thanks, Sean.
Okay, great, John. Let's get started. Our aim with this format is to package a relevant investment theme with views and perspectives from multiple companies and industry experts. As always, at WTR, we aim to do this in a format that is easily digestible for listening investors and accessible. We will also publish a key takeaway report in a couple days for everybody to review. To remind all, our content at Water Tower Research is entirely open access. It can be found on our website at www.watertowerresearch.com. I'd encourage you to take a look there. For those with access, investors can also find our content in all the research aggregators like FactSet and Bloomberg as well. We've published an extensive amount of new and relevant content on cryptocurrency, so please take a look. Very topical, very interesting, lots going on there. And I encourage you to dig into some of John's research as we have some great perspectives there. Finally, we'd love to hear from what you think about this mini conference and symposium. So please feel free to leave comments or to reach out directly to myself or John on LinkedIn or by email directly. Now I'd like to invite John to frame our conversations for today. John?
Sure, Sean. So today's special edition, it's an extended podcast, really, and then we're focusing on the recent U.S. cryptocurrency legislation, its impacts, and possible future legislation. Now, the passage of the Genius Act, which was signed into law on July 18th, represents a landmark moment for cryptocurrency regulation in the United States. Now, the primary impact is to establish the first comprehensive U.S. federal regulatory framework specifically for payment stablecoins. Now, this really aims to provide the much needed clarity and consumer protection in a rapidly evolving digital landscape that we all see. Now, this was previously characterized by legal ambiguity and a patchwork of state-level guidance. One of the most significant impacts of this clarification is who can issue stablecoins and under what conditions. In addition, the Genius Act introduces stringent requirements for stablecoin backing, transparency, and consumer protection. It stipulates that stablecoins must be backed one-to-one by highly liquid assets such as a U.S. currency, bank deposits, or short-term U.S. treasuries, and prohibits the use of other cryptocurrencies as reserves. Now, beyond the direct regulation, the Genius Act has several broader implications. It explicitly clarifies that compliant payment stablecoins are not to be considered securities under the federal securities laws or commodities under the Commodities Exchange Act, thereby removing them from the direct oversight of the SEC or the CFTC and placing them under bank regulators. Now, this classification provides regulatory certainty, which is expected to attract more traditional financial institutions, which we've seen a lot of this summer, and establish businesses looking into stablecoin space. Now, this potentially could lead to increasing innovation and mainstream adoption for use cases like faster and cheaper payments, including cross-border remittances.
Thanks, John. It's a great overview and context, and very excited for our guests today. Can you run through the list of speakers we'll be having today in the symposium?
Sure. Sean, we're going to have 5 speakers today. So the first is from Galaxy Digital. We have Jonathan Goldwaski. He's the head of investor relations. Now, Galaxy is a $10 billion company. It's really in the digital asset and data center infrastructure markets. The second one is BTCS. We have CEO Charles Allen. BTCS is the oldest public cryptocurrency company and is focused on the Ethereum market. Now, from Soluna Holdings, we have the CEO John Belizaire. Soluna provides computing infrastructure to Bitcoin miners and to HPC/AI users, and it leverages green energy to do that. And the fourth is from BitFuFu. We have Charlie Brady. He's the head of investor relations there. BitFuFu is one of the largest Bitcoin miners and mining services providers in the world. And from Greenidge Generation, we have Bakar Mahmoud. He's the general counsel there. Greenidge is a vertically integrated power generation company focused on cryptocurrency mining and infrastructure development. Over to you, Sean.
Great. Thanks, John. Let's get started with the main event and get to our guests.
Sounds good. Well, everyone, welcome Jonathan Golowski from the Galaxy Digital. I believe you're now the head of investor relations. Is that correct?
That's correct.
Excellent. So I really want to thank you for joining the symposium today to talk about cryptocurrency legislation in the US. I know it's a big deal, but why don't you just get us started with maybe 30 seconds on Galaxy and its place within the crypto space?
Definitely. And John, thanks for having me. Galaxy is a diversified operating company focused on what we believe are two of the most profound technological advancements of our generation, the digitization of finance and the digitization of intelligence. So at Galaxy, we have two core operating businesses. We have a digital assets business, which encompasses our global markets and asset management and infrastructure solutions businesses. Within global markets, we provide OTC spot and derivatives trading and lending to 1,400 institutions globally. We also have an investment banking arm, which provides M&A advisory, as well as equity and debt capital market services to that same institutional client segment. Our asset management and infrastructure solutions business encompasses our investment management division, as well as our blockchain infrastructure products and services. The asset management arm manages a suite of ETF and alternative strategies and really takes the DNA that has been core to Galaxy since our founding and externalizes that for institutional allocators and individuals. And then our infrastructure solutions piece of that business enables our clients to participate in an increasingly on-chain and decentralized future through things like staking, tokenization, and custodial technology.
Now,
our second operating business is data centers, where we develop and operate AI and high-performance compute infrastructure. Our flagship facility is our Helios data center campus in West Texas, and we're currently building it out to be one of the largest data center developments in North America. We have 800 megawatts of approved power capacity and another 1.7 gigawatts under study by ERCOT and the transmission utilities in the region. And we recently signed a 15-year lease with CoreWeave, who is our anchor tenant at the campus. In addition to those two operating businesses, we manage a portfolio of more than 1.5 billion in digital assets and venture investments off our balance sheet. We're a publicly traded company on NASDAQ. The ticker is GLXY, and we've got a global team of roughly 600 people now.
Great. So you guys have been at this a while, right? I mean, you're like one of the originals, right? When did it?
Yep. Yeah, we started in early 2018 out of our founder and CEO, Mike Novogratz's family office.
Great. Now, if you're looking at U.S. regulatory landscape, I mean, obviously there've been some progress recently. We'll talk a little bit about that in a minute. I would wonder, from your thinking, how important is it that the U.S. clear up the regulatory framework for the crypto industry in the United States?
Yeah, it's incredibly important. Clear regulatory guidance will significantly expand access to digital assets for institutional investors and remove a lot of the uncertainty that's kept them on the sidelines. And with more institutions coming in, that will drive a major wave of institutionalization across the entire ecosystem. That means better financing options for digital asset projects. It means broader access to digital assets through new and existing institutional platforms, and really an overall maturation of the market infrastructure, which is necessary for adoption to actually happen at scale. Regulatory clarity will also open the door for TradFi to operate on chain for the first time and actually engage with these public blockchain rails in a way that's both compliant and scalable, which will then bring improved trading efficiency, more transparency, new ways to issue assets and raise capital, and really replace some of the most friction-heavy parts of traditional finance with instant programmable infrastructure. That is a massive unlock for innovation in financial services. And you're actually already starting to see that excitement reflected in the capital markets. The IPO market for digital asset companies is wide open right now. We at Galaxy completed our domestication and US listing in May of this year. You saw Circle go public. You've got Bullish, Gemini, BitGo, and a few others in the queue as well. And you're also starting to see early signs of this concept of the tokenization of everything, with proof of concepts and live projects moving traditional assets like equities, bonds, and treasuries onto the blockchain. And that is the future that we've all been building towards.
Right. Once you get to the blockchain, the friction just goes way down.
Yes, exactly.
Now, do you guys perceive this regulatory improvement coming as just helping the broader industry? Obviously, it does, but also helping your company directly?
Yeah, definitely. We started Galaxy over 7 years ago to really be the bridge between digital assets and the institutional world. We were about 7 years too early, but our thesis wasn't wrong. And it really allowed us to develop the IP that I don't think any other firm in the world can claim. We've built deep relationships with some of the world's largest asset managers and hedge funds and pensions, endowments, and family offices. We've developed infrastructure and technology that's now been stress tested through multiple digital asset market cycles. And we've launched products and built track records that meet the diverse needs of institutional allocators and investors. On the global market side of our business, the regulatory clarity means bringing more clients on chain and strengthening relationships with those 1,400 plus institutional trading counterparties that we have. In banking, it means more M&A and capital raising deal flow as crypto companies look to scale or go public and need to work with a trusted advisor. On the asset management side, it means the long-term allocators are going to feel more comfortable allocating capital to the space. And now we can offer them a full spectrum of investment capabilities, everything from a simple Bitcoin ETF to a venture fund vehicle focused on the financialized applications of digital assets. And then as those clients look to generate incremental yield on their assets or tokenized financial instruments, our blockchain infrastructure business becomes an important piece of the holistic offering we can deliver to our clients. The last thing I'd point to is really our public listing on NASDAQ, which candidly might not have been possible without the progress that we've seen on the regulatory front. Just in the 3 months we've been a US listed company, it's already been a game changer for us. We're now available on retail platforms like Robinhood and eToro. We've been added to major indices like the S&P Total Market Index and some of Vanguard's CRISP benchmarks, which are tracked by ETFs with tens of billions in assets. That's all led to more visibility, stronger liquidity, better access to Galaxy. And so as the US takes these big steps forward with crypto legislation, we think we're incredibly well positioned to lead.
So Genesis was the act that was recently passed into law. Was curious if you saw any particular color there with the stablecoin approach and how that's going to change things. I guess let's call it more near term.
Yeah, absolutely. We think the Genius Act is massively important. Honestly, it should be viewed less as a crypto bill and more as a payments and dollar dominance bill. It's all about modernizing the rails of our financial system, which haven't really changed in decades. And now we are finally bringing them into the 21st century by using blockchain technology. By creating a clear regulatory framework for dollar-backed stablecoins, the bill is going to unlock a new way to distribute dollars globally, not just through your crypto native stablecoin issuers like Circle, but also through traditional banks and fintechs. That's ultimately going to drive faster settlement, better transparency, broader access to US dollars, both here and around the world. And it can be argued that perhaps the biggest winner of this all is going to be the US dollar itself. I mean, every time a stablecoin moves, it's backed by a US dollar sitting in a US bank, often in the form of US treasuries, which is going to create real sustainable demand for US debt. Now, beyond just stablecoins themselves, there's definitely a positive read through to the broader digital assets ecosystem with the Genius Act. As stablecoins gain mainstream adoption, people are going to become more comfortable with wallets, with operating on chain, understanding smart contracts, and that naturally paves the way for broader adoption of the entire digital asset ecosystem and opens the door to an entirely new era of finance that is built on blockchain.
Right. So one of the things I've been talking to people about is what needs to happen next legislatively. I mean, I've got responses to, well, we need more clarity on the tax situation. We need more clarity on what's a commodity, what's an instrument, da, 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 da. And then the last thing I heard was, we need more clarity on which agency is doing what so they don't get conflicting directives. What is your thinking on what would be most critical to happen next in the US legislative and regulatory environment?
Yeah, John, so I agree with all those points, and they're actually pretty nicely wrapped up into what's called the Clarity Act, which is where the attention in Washington has really shifted towards. And you can think of the Clarity Act as market structure legislation, which is all about setting the rules of the road for the broader digital asset ecosystem beyond just stablecoins. It's defining what's a security, what's a commodity, who has regulatory oversight of each, so that operators and investors and regulators all know how to participate within the system. That is incredibly important and much needed. The Clarity Act has already passed the House with strong bipartisan support. Senate Banking Committee Chairman Tim Scott has said he wants to finish this process by the fall. And so if all goes smoothly, which is a big if, we could see a second bill signing by October. And if we get the Clarity Act across the finish line, between that and the Genius Act, that's 95% of what is actually needed to make the US the global leader in digital assets. It gives the industry a clear, durable framework to build on without having to guess what the rules might be from one administration to the next.
That's excellent. Because this is the last question I kind of have for you is, how far behind is the U.S.? It sounds like the Clarity Act could catch us up, but if no Clarity Act, how far behind is the U.S.?
Yeah, so I don't think the US is far behind at all. There is a tremendous amount of momentum domestically right now. And given how quickly things are moving in Washington, I think it's fair to say that we're actually starting to set the pace. The reality is, whatever the US does in this space will have the biggest ripple effects globally. Everyone from policymakers to founders to investors is watching the US for direction. Now, that being said, Europe was definitely early with regulation. The EU's MiCA framework, MiCA stands for Markets and Crypto Assets Regulation, was a big step forward. It provides a unified set of rules for stablecoins and digital assets more broadly, and that went into effect at the end of 2024, and it's a very solid framework. Asia, on the other hand, is much more fragmented. A lot of crypto's early infrastructure and exchanges and wealth originated there or resides there, but the regulatory approaches across the continent vary pretty widely. Hong Kong is trying to position itself as a hub for crypto companies and talent. Singapore embraces blockchain, though a bit more cautious around the speculative side of crypto. China has taken a very restrictive stance and completely outlawed private ownership of digital assets altogether. And then there's Dubai, which is branding itself as a global crypto hub. They have built a dedicated digital assets regulator called VARA. They offer clear guidelines and tax advantages for digital assets. And all of that has helped them attract a lot of interesting startups and talents to the region.
Well, Jonathan, this has been super helpful. We're running a little over, and I wanted to thank you so much for your time. We'll talk to you soon.
Thanks, John.
Well, everyone, welcome. And Charles, welcome to you. How are you doing?
I'm good, thanks. Thanks for having me.
Charles Allen is the CEO and chairman of BTCS. That's the ticker symbol BTCS. And thanks to everyone, and thanks, Charles, for attending our symposium on the U.S. cryptocurrency legislation. So why don't we just kick it off with the simple first question. Can you give us 30 seconds on what you and your company do and your place in the crypto space?
So first off, we're the oldest public crypto company in the world. Right now, we are focused on providing investors with leverage and yield generating exposure to Ethereum. And we do that through, similar to what Strategy does, raising capital in the public markets, above market debt converts, and using DeFi, which is super exciting. And then our infrastructure operations support additional growth. So it's basically, we're calling it the DeFi, TradFi, Ethereum accretion flywheel.
Great. And so obviously we're talking about U.S. legislation here. It is going to help when they start passing some of this stuff. Don't we need more?
100%. right now, Ethereum specifically has the ability to be the rails of all digitized or tokenized real world assets. And in order to do that, you need a regulatory framework in which these assets can move, who can custody them, what you need to do them, whether that's a stable coin, whether that's a tokenized security. And so as these regulations start to, move through the approval processes, it provides clarity to larger institutions to be able to come in and build solutions on top of basically the rails of the future.
So do these legislative moves that you're thinking of and hearing about, and we'll talk about the Genesis Act in a couple minutes here, do they directly help your company, or is it more a help for the general crypto industry?
I would say the Genius Act definitely directly helps BTCS because one of the core components of that is stablecoin regulation. And over 60, I think it's about 60% of stablecoins are built on top of Ethereum. And so we are a validator. We run validator nodes for Ethereum, which is basically staking, except we do it ourselves. So we earn a higher yield than someone that used a third party. And we're a block builder, which basically means we're generating more revenue from building transactions that land on chain on Ethereum. And so, yeah, I would say, you've heard a lot of people say that the Genius Build most impacts Ethereum. And as a provider of the infrastructure for Ethereum, it is, a huge win for us.
Great. So let's just talk about the Genius Act that just passed. So give us any kind of color you have, and give us any kind of thoughts you have on how important the stablecoin business is, going forward now that at least we have some clarity.
I think the stablecoin business is probably, I mean, it's the first real world use case for crypto that's had mainstream adoption. And that's why I think this act really means a lot. And if you look at why it's going through, the US basically wants to export the dollar. Well, if you want to export the dollar and have that be the reserve, continue to be the reserve currency of the world, it needs to move more freely. And for it to move more freely, the old systems just don't work in 2025, or they're starting to not be sufficient enough. You don't want to be, using Swift and legacy systems in today's time. And so if you can do that on the back of stable coins on Ethereum's rails, and now you can move money globally around the world with near no transaction fees or limited fees 24/7, that's a huge, it's a huge win, and it allows the US government to export the dollar.
Right. So you're really reducing friction in the system by a significant amount, I would assume.
Huge magnitude. I mean, I don't have a number on what that would look like, but it's if you can basically start moving capital effortlessly for no cost, and it allows, and that's just the tip of the iceberg, right? I mean, stablecoins is one token that can get one real world asset that has been tokenized, but there'll be other regulations as other real world assets are tokenized, such as securities, right? I mean, you could basically revamp the whole securities market, and hopefully that'd be built on Ethereum's rails.
Yeah, right. Ethereum is flexible enough to handle what almost any token you can conceive of at this point.
Without a doubt.
So with the Genius Act passing, what other stuff do we need? I've talked to people and they said, well, we need more clarity on taxes. We need more clarity on which agencies are doing what. And, what is a commodity and what's an instrument? What do we really need in the US that would be the next big thing for you?
Well, I think more clarity from the SEC, but they've over the course of this year I think it's been night and day. They've come out and said Ethereum's not a security. Understanding what tokens are and aren't a security, I think would be really helpful. They are in favor of the tokenization of securities, which is extremely important. It basically can fix what I view as a broken capital markets, but that's a very complex process, right? Because you have issuers that need to register these securities, so there's a whole process there. You have broker dealers, which are regulated, which are selling the securities. You have exchanges, and they have their whole set of rules. And all of a sudden, you move to tokenization, and it becomes a little complex of what can you do, what are the capital requirements. So I think securities are probably the next, legislation that I would like to see come through, is more clarity there on both how you could tokenize real world assets and also what is a security. Like, what is the framework to decide if a token is a security? We've basically come to the conclusion that meme coins are not securities, but can we have, better guidelines about what that looks like? And also, if you do want to issue a tokenized security, is there a regulatory framework in which you can do that, and actually get it done? I mean, the old administration would say, well, there's a regulatory framework, come in and register. We're here, come in and register. And it's like, well, then you can't actually register if you come in, right? You can come in and get subpoenaed because now they know who you are, and investigated, but you couldn't actually register. I mean, it was a fallacy. So I think that'll be a huge gain when we get clarity there.
Right. So let's broaden the discussion just a little bit and talk about other jurisdictions. I mean, I've heard things like the UAE has done some good work. The EU has done some stuff. How far behind is the US in terms of its regulatory framework?
Um, I'd say pretty far behind. We are just now starting to push these things through. Um, Europe has, or the EU has MiCA, which it was, I forget exactly when that's been out for a little bit now, 2024, where they're actually giving clarity. So I think we're playing catch up now. And unfortunately, the result of that was innovation was stifled. A lot of startups moved offshore, either to the EU or countries where there's just, very light regulatory framework. And as we look to the future, I think we're now playing catch up, and I think we're doing a pretty good job, which is it's really exciting to see. I mean, you can see it in the growth of, um, maybe a benchmark would be the number of public companies that are coming to market within the crypto space that would have never even thought about that in the past, right? Both institutions are interested in these companies. The companies have regulatory clarity, so they're willing to be in the public eye, and so that's a really good barometer of what's going on in the markets.
Yeah, well, one I don't want to call it silver lining about being late is you can see what others have done and maybe do something slightly better. Maybe I don't know. We'll see. Are you optimistic that we're going to get more legislation in the next year?
I hope so. I mean, having heard some, like Bo Hines and some others speak that probably have their finger on the pulse of some of these issues. I think it's pretty important that the regulations come very quickly, because if you just look at how a presidency works, like you start to lose the ability to get stuff done as you get later and later into a term, where you don't, right now, most things have the ability to get through, both the House and the Senate. So I think, yeah, I'm. Who knows what happens 4 years from now, and who knows what happens leading up to 4 years from now. So I think there's a window of probably, 1 to 2 years where good legislation can get through, get passed, and then it's kind of set in stone. Unless, it's pretty hard to change it at that point. Not to say it couldn't change, but it's much. If it doesn't happen quickly, I start to worry that, maybe it won't happen at all, because you never know, if the pendulum swings the other way. There's potentially a new administration that is not, crypto friendly. So you just don't know. But I think the way things are going today, it looks very, very promising.
Great. Well, Charles, thank you so much for participating in the symposium. I'm sure we'll be having a lot of good discussions in the future. We're going to have to wrap it up there. I want to thank you again for your time.
Yep. Thank you so much.
Well, everyone, welcome John Belizaire. He's the CEO of Soluna Holdings. John, thanks for being here.
Thanks, John. Pleasure to be here.
Certainly, we're going to be talking about the U.S. cryptocurrency legislation. But before we get started with that, John, let's take a step back and maybe give us 30 seconds on you and your company and your place in the crypto space.
Sure. Soluna is a digital infrastructure company that builds data centers that are co-located with large-scale renewable energy projects that have wasted renewable energy. And we convert that energy into these data center facilities that can be used by very large crypto mining companies. So Soluna is really in the business of providing infrastructure for the crypto industry. And for the last several years, we've been focusing on building that infrastructure in a sustainable way using these renewable assets.
Great. So to get cut right to the chase, certainly the U.S. Legislation has been clearing up the regulatory framework somewhat. Was curious as to what impact do you think it's going to have, this Genesis Act?
The Genius Act is a fantastic piece of new legislation. Crypto has always been built on infrastructure, and behind every Bitcoin transaction or Ethereum smart contract is really a network of data centers, much like the data centers we build at Soluna, energy sources and compute resources. And for years, that infrastructure has operated in a kind of legal gray zone, really limiting institutional appetite from the financial services space for larger scale investment. And I think with this new legislation, that's about to change. Clear regulation turns crypto into a financial infrastructure platform and less of a speculative asset class. That shift is crucial for unlocking institutional capital, which tends to avoid gray areas. And we're encouraged by legislation that moves digital assets into the mainstream, not because we issue coins as a company or tokens, but because we build the energy and computing infrastructure that the digital finance needs to scale that infrastructure sustainably over time.
So Soluna would see a benefit as the whole industry gets more mainstream, more demand, more need for compute resources.
That's right. And fresh levels of capital coming into the space because they feel more comfortable backing this type of infrastructure investment.
Yeah, certainly we've seen that this summer. I mean, with a lot of people raising money to put into Bitcoin.
Right. Yep.
Looking at the Genius Act specifically, can you give us some more color on that? I mean, did it say which agencies are you familiar with what kind of is going on in there?
I'm not as familiar with the agencies. I know that what it's trying to do is to put some real regulatory guardrails for the stable coins, everything from how much they have to have in reserve, tracking of those, the types of backing of the stable coins that need to be deployed. It's really giving it the same level of support or specificity as traditional financial services assets. And what's exciting about that is that's a signal to the world, if you will, that these types of assets are being seen now as real infrastructure assets. The bill was passed here with a very robust vote. It's creating a real federal framework for issuing and regulating these payment stablecoins. I know that in the provisions of the bill, it limits the issuance to insured depository institutions, certain licensed, non-banking entities. I know it requires one-to-one reserve banking with highly liquid assets such as cash or treasuries. So it makes it very clear what you have to back these things by, not other coins. It mandates monthly public disclosures, audits, and consumer protections, all things that we have become accustomed to around traditional financial securities. And these technologies are innovations, but they should also fit into our standard financial network. And the Genius Act is allowing that to happen. It also clarifies properly, issued stable coins versus, establishing them as securities or not securities. It just establishes a very clear framework on that.
Right, really makes them much more mainstream acceptable.
That's right. That's right. And so I think you're going to see a proliferation of stablecoin growth and development. You're already seeing very large companies going public, or companies that are supporting part of the ecosystem, if you will, going public, because there's rightfully so a view that this industry is going to become very big and mature over several years and see a massive increase in the capital coming in. And that's what we're excited by, is that capital covering the entire ecosystem, not just the the stablecoin trading platforms with the underlying infrastructure supporting it.
Right. Yeah. I mean, one of the things that, as a technologist, I look at it and say it really reduces the friction when you go digital. And that
That's right.
friction reduction is just too inherently good. And eventually something is going to be the right thing, whether it's Bitcoin or Ethereum, or you can argue the different cases or all of them. I think there's a big momentum behind it. What kind of legislation are you seeing? I'm hearing things about something called Clarity out there on the horizon. I don't know a whole lot about that. What's happening with that?
Yeah, we're tracking Clarity also. That's another step change in regulatory support and clarity. There's been this, I don't know if you want to call it battle, but sort of who's in charge of regulating these types of assets? Is it the SEC or the CFTC? The Clarity Act is going to establish those jurisdictional boundaries, right? Helping to clarify which digital assets qualify as securities versus commodities, right? So SEC manages securities, CFTC focuses on commodities. And it also, as I understand it, introduces the concept of what a mature blockchain should be. So you have all sorts of projects. I've been in the industry for about almost 8 years, 2018, and you've had a series of different crypto and token projects that have evolved, some of them very immature, giving a sense of maturity when they're not really at that level. Clarity describes what it means to have certain decentralization and operational standards. So you might have a blockchain that seems to be open and decentralized, but in reality, it's controlled and managed by a small few owners of the project. Clarity will make it clear that a mature blockchain falls under that type of regulatory framework and makes it clear what that is. And it's going to have certain clear and objective ways to determine what a mature blockchain is. I know it's going to assign some regulatory authority for digital commodities to the CFTC, while also sort of maintaining some oversight by the SEC on the securities aspects of these things. And if I remember correctly, it also it creates like a dual pathway for exchanges and brokers that handle both types of assets. So if you're an exchange and a brokerage and you're doing traditional financial services and you're adding digital assets, there's a very clear pathway that you have to follow to be regulatory compliant. KYC, AML, all of those types of things are going to be part of that, and it just ensures that there's proper record keeping, so we know who's on these platforms and making sure they comply with all the other regulatory frameworks like KYC, AML, OFAC, etc. I think it's a great legal step forward. Other regions around the world, the EU, for example, has established law frameworks to provide some clarity around these assets, and it's been a long time coming for our administration and our government to also establish some clear legal clarity. It's probably why it's called the Clarity Act, that could unlock really large scale institutional investment in this space.
So yeah, you were mentioning other jurisdictions. Obviously everybody is pointing to the Clarity Act. With that, some have said basically the U.S. is caught up if you were to pass that. Is that the way you see it, or is there more left to be done? Maybe on taxes? I don't know.
Well, there's always lots to be done on these types of law frameworks and clarification platforms. The innovation that comes with this technology is now approaching almost 2 decades old, and it is about time that the overall financial institutions and the financial markets evolve to embrace them. They're not going away, but we do want them to be safe investments. We do want them to ensure that people aren't getting scammed and abused by these technologies. And so these law frameworks are really helping to get us. I'm gonna have to record that one. Record that part. These technologies are really advanced and innovative, and it's about time that the law frameworks caught up to that innovation and gives the regulatory clarity, support, and jurisdictional bifurcation across the different agencies to support the management and oversight of these assets. And I think that we're catching up to EU and UAE, but it's very likely we will surpass them as we look at all the different aspects that need to be regulated. You made the point about tax. We might think about energy conscious digital infrastructure, right? How is this technology being energized and supported from a infrastructure perspective, and make sure it's aligned with where we're going as a country, and that it's sustainable. We want to give a framework for investors to be confident and operators to have clarity. We might also want to drive some law frameworks, not to sort of impose policy ideas here, but there might be other law frameworks that support making very specific investments in the country that can support this new and what's going to be very large industry. And so there might be incentives to co-locate with renewable energy power plants. There might be incentives to build certain scaled infrastructure in parts of the country where job creation is going to be really helpful. There's lots of ways to entice, and it might be interesting to attract capital and give that capital certain incentives to deploy into these markets. So there's lots of things that can be done. I think these two bills, one that's already making progress, is going to be a great framework and platform to start from.
Great. Well, John, thanks so much for spending. Looks like we're going to have to wrap it up there. And again, thank you so much for your time.
Thanks, John. Pleasure to be here.
Well, everyone, welcome Charlie Brady, the VP of Investor Relations at BitFuFu. The ticker there is FUFU. Thanks for attending our symposium. How you doing?
I'm great. Thanks for having me on. Appreciate it.
Hey, no problem. So let's just to start this off. Can you give us 30 seconds on your company, kind of your place in the crypto space, and whatever else you feel is critical?
Yeah, sure. So BitFuFu is a self miner, but what's a little bit different is we are also a cloud miner. And what that means is we are able to take our hash rate, which was 36.2 exahash at the end of June, and dynamically allocate that between self mining for ourselves or cloud mining, where we are essentially leasing out our hash rate to customers for specific periods of time. And we can move that back and forth on a variety of factors, demand and how much we want to mine for ourselves and other factors. So that's kind of unique for BitFuFu. And you also offer, we sell miners, we lease miners, we have our own mining pool, our own operating system now. So really full service, soup to nuts, one-stop shop for Bitcoin mining.
Great. Now, obviously the US just passed a law here recently, but do you think it's going to clear up the regulatory framework that we need? Is it enough?
I think it's a start. It's certainly moving us along the continuum and a lot better than where we were. I think it is, you could consider it kind of a major turning point for crypto mining companies like BitFuFu and for other crypto participants in the digital asset space. It's been a pretty uncertain environment for a really long time. And so I think the fact that we now have a little more clarity and a supportive regulatory environment, not only for us, but for others in the space, sets the foundation. I think it gives more confidence to go out and put more investment into the space. Now there's more clarity on that. I think the Anti-Surveillance Act is that's positive. It pushes back against kind of government overreach and reinforces privacy principle, which of course is what Bitcoin was founded upon. Kind of the basic tenets of that. And BitFuFu, that's really important to us with the cloud mining side, the transparency. Because cloud mining in the past, I think, has got a bit of a bad rap, but we offer full transparency. So that aspect of it is key to us. I think on the Genius Act, it does give some guardrails for how digital assets are going to be classified and for cross-border payments, things like that. And so again, that's going to help with more reinvestment. But And I think it's going to drive more institutional interest in Bitcoin. But certainly more is needed on that. This is kind of the starting point, I think.
So, in terms of the Genius Act, are there any things that are directly helpful to BitFuFu in there, or is it more just the broader space?
I mean, I think it's really the broader space. We still need the other stuff we still need, I think, is comprehensive tax clarity for digital assets. Individuals and institutional investors right now, it's kind of a patchwork, right? It's not really a comprehensive plan, particularly at the federal level, at the state level. How are staking rewards taxed or classified? How does mining income and token rewards? There's a whole myriad of things that are very unique to the Bitcoin mining and the digital asset space in general that just really, I think need more clarity around it. What's considered an asset, what's considered a security, what isn't. Those are major issues for us. I mean, right now our cloud mining business, we've seen phenomenal growth, but all of that's been outside the U.S. We don't offer cloud mining in the U.S. and the reason for that. The number one, really the only reason, is regulatory issues. We're a public company. We are regulated by the SEC, and the last thing we want to do is trip over some state regulation or some obscure federal regulation or lack thereof, and find we're kind of in hot water with the regulators. We don't want to do that, so we're proceeding very carefully. We get some clarity on that, making sure that it's not a security that has to go through a certain regulatory environment. That'll go a long way to helping out as well. So there's more to do here, but we're moving in the right direction for sure.
Now, in terms of other legislation that's really needed, obviously you mentioned the tax stuff, whether it's a commodity or a stock or whatever, an equity. I can't believe it would be an equity, but okay, whatever they say it is. Do you need more clarity on which U.S. agencies have which responsibilities? Is that also in there?
Yeah, I think that's going to be key too. There's got to be some continuity so that people know, who's in charge of it, who's making the rule, and you don't have different agencies making conflicting rules or conflicting judgments, right? I mean, that all goes to the overall clarity and streamlining of regulations and laws and overall guidance on how to proceed going forward. So I think, having a centralized, repository or source of information is going to be a key aspect of it as well.
You were mentioning that a lot of the growth that you've had, obviously, in your cloud business has been outside the U.S. So, how far behind is the U.S. on legislation of this or regulation versus other jurisdictions?
Yeah, I mean we're catching up. I think and it really varies. We've seen there's the EU micro legislation that has a unified set of rules across 27 member states, covering everything from stablecoins and custody to exchange operations and some asset issuances as well. So that obviously the EU has a little bit of ability to do that because it's one organization for all those 27 member states. But not to say that they're the best at it either, because some of what they've done for stable coins and narrow focus that they've had is not necessarily positive either. But they are at least have done some legislation to do that. Singapore and the UAE are also, I think, notable examples of what they've done. They're building regulatory environments that attract capital into those jurisdictions. That's creating more innovation by licensing agreements. So, still pretty strict there, but more predictability. You've seen Switzerland kind of position itself as a hub for tokenization and asset-backed crypto instruments. So, that's become, I think, a lot more accommodating to institutional adoption in that country. And, by contrast, the U.S. has been lagging behind. And it's not because we don't have the technological leadership to do it. It really is the regulatory fragmentation, inconsistent enforcement that we've had. And so, this legislation is a starting point. And I think if we can continue to go down this road and codify, clarify what is an asset and what is not, and what's a security, and get more regulations and some centralization on policy, that's gonna really help catch the U.S. up because if you in terms of Bitcoin mining, I mean the United States is the number one area geographically for Bitcoin mining as far as capacity goes. So it's important, I think, that we play a leadership role in that.
Well, Charlie, this has been super helpful. I really appreciate you spending the time. Unfortunately, we're going to need to end it there. And I want to thank you for your time.
Hey, thanks very much. Appreciate it.
Welcome, Bashar Mahmood. He's the general counsel over at Greenidge Generation. The ticker symbol there is GREE. How you doing this morning?
I'm doing great, John. How are you?
I'm doing good. So we really want to talk about the recent, U.S. cryptocurrency legislation. But before we get to that, let's talk about your company and maybe its place within the crypto space.
Yeah, absolutely. So Greenwich Generation is a NASDAQ listed power generation and Bitcoin mining company. And so what that means is that we not only mine Bitcoin, but we also generate the assets on some of our sites to actually provide the electricity to power our miners. And we operate in a number of different states, and we've been basically at this since 2019.
So with the recent U.S. legislation, it seems to have cleared up the framework. Maybe you could give us your thoughts on what the Genius Act really has done.
Yeah, so I think the Genius Act is the probably the first major milestone after what has been termed, the war on crypto's end, and which basically took place in obviously the 2010s and early 2020s. So I think it's foundational in the sense that it's setting forward a framework for how value in the form of national currencies can be issued and disseminated. So I think it's an obvious first choice in terms of providing greater clarity to the industry.
And how is that going to affect your company?
I don't think it affects us directly in the sense of changing too much in terms of how we operate, but I think in the sense of it being a hallmark for greater clarity on the use of blockchain technologies generally, which is what crypto is at the end. It's supposed to be a way to do things faster, cheaper, more efficiently than the old means of doing things. I think it's important. Basically, when you have people experimenting, I guess, in the absence of clear regulations and trying to experiment with new technology, whether in this space it would be decentralized autonomous organizations, decentralized finance, or smart contracts, you can find very interesting uses for those technologies. But until the regulators and the lawmakers sort of give a nod of approval, the companies that most people know and trust are going to be reticent to try to integrate those technologies into their products, platforms, and services. So it's sort of like you're at Kitty Hawk watching the Wright brothers take flight, and you're saying to yourself, "Wow, that's really cool. Like I would love to fly one day, but it's just too dangerous to do so right now." It's a pretty broad answer, but I think just keep in mind that if the idea is to create a new financial system, that blockchain technology is going to touch an untold number of industries and verticals.
Right. And we need the legislation so everybody can have confidence and trust that, you're not going to get caught by the government. I do hear people talking about we do need a little bit more legislation. We need maybe something on taxes, maybe something on which agencies do what. I know the Genius Act did something on stablecoins and really made that the world of the banking regulators, right? So what else do you think is needed for it to really, come up to par with the rest of the world?
Yeah, I think that those are all viable areas to sort of implement more comprehensive approaches. We have this thing in the United States, which is sort of a gift and a curse. This idea of the states as laboratories. So in a sense, on the bet on this on the sorry on the negative aspect of that is that we've got a lot of fragmented litigate regulation. But on the good side is we can see what's working and what's not. But I think the thing that's most interested in terms of how regulation can kind of move forward is probably up the value chain. So now we're starting to get a clearer picture about how money can be issued and transmitted on the blockchain. We might move forward into regulating how different assets that people hold their value in, whether it's stocks, bonds, commodities, or real estate, are issued in digital version and transferred between one person and another. So I think that that's probably something to look out for more in the medium term, as it's going to require a very comprehensive approach when we're digitizing real estate, for example. But definitely something exciting that I think is going to unlock a lot of innovation across a number of industries.
Yeah, if you could get rid of a lot of friction in the system, it'll definitely run better. So in terms of other jurisdictions, how far behind is the US now that we've passed at least the first step?
I think the US is definitely hanging back a bit, especially relative to other jurisdictions that might have a more unified approach, like the EU, or smaller jurisdictions like Singapore or the Emirates, who have made it a stated goal to foster innovation in the space and kind of encourages businesses to come on shore where they're at. But I think we can benefit from having that kind of a secondary position in terms of the benefit of seeing how all of those different frameworks have played out. And at the end of the day, when the US sort of puts its imprint on the topics that the EU or other jurisdictions have already made, it's going to make a big difference for the entire world as far as how this next generation financial system is going to be built.
So Bashar, can you just give me an idea how the recent legislation that passed impacts your company directly?
Yes, of course. So if the Genius Act is sort of a sign of what's to come in terms of broader regulation on the use of blockchain technologies generally, I think it's going to have an enormous impact on Greenidge, which is a vertically integrated Bitcoin mining company, and probably a lot of other companies listed as well. For example, back in 2017, Delaware, the state where we're incorporated, added minor addition to the language on how companies can store their corporate records, including stockholder lists, allowing them at that time to actually store those records on a blockchain or distributed ledger. If you think about it, that set up the ability for most publicly listed companies, which are incorporated in Delaware, to trade their stocks on the blockchain. And if you just go back in time for a second and think about how things used to be done, when trading volumes started to explode in the 1960s, before stockholder certificates or stock certificates were kind of aggregated in one centralized kind of depository institution, DTC, they actually had to close trading on Wednesdays for a few years to allow brokerages to process that backlog and send messengers and runners back and forth between the firms to trade those stock certificates. You couldn't imagine a world like that today. So, conversely, if we think about what might be next in terms of possibilities for listed companies, especially small cap companies who have very fragmented retail shareholder bases, if those records were stored on a blockchain, companies like Greenidge would have a much better ability to communicate with their shareholders, for their shareholders to communicate with us, including potentially more streamlined voting procedures on not only at annual meetings, but on more corporate actions generally, more akin to a decentralized autonomous organization, if you will. We could have more innovative ways of fundraising or structuring capital raises. And lastly, if we knew the wallet address that was certified to each of our shareholders, theoretically, we could issue a Bitcoin dividend directly to those shareholders down the road. So I think just generally, we're basically excited about all the potential future uses of the technology. And I think the Genius Act, regulating the transmission of the dollar on the blockchain to begin with, is probably the best and best first step, and we're excited to see what's to come after that.
Wow, that sounds super exciting.
Thanks, John.
Well, this has been very interesting. Unfortunately, I'm going to need to wrap it up there. I'm running a little over on time. It was great, and I want to thank you so much for your time.
Thank you so much, John. Pleasure to be with you.
Okay, so there you have it. We just scratched the surface of what is coming in crypto, and I'm sure you'll be hearing a lot more from us and John on this topic over the coming weeks and months. We believe that the developments in this space will continue at a rapid pace. Please watch for our research videos and written research to stay abreast of this exciting market. It's going to be rapidly changing and innovating, and we're going to be on top of it. So please check back for our research or subscribe. Finally, a special thanks to producer and editor of this podcast, my colleague Joe Brunetto. Thanks everyone for listening today. And again, please subscribe and visit at www.watertowerresearch.com to view WTR small cap written research products, podcasts, fireside chats, and conference schedules. We will see you next time for another WTR mini conference symposium. Thank you, everyone. Have a great day.